Well, greetings and a good morning, and Saturday's here again. Philip Newbury here with another Ask the Expert. And joining me in the studio we have Elaine VonCannon, Associate Broker, ARB, SRES, Notary, Residential and Commercial Property Manager with Coldwell Banker. And contact number, here we go, VonCannon Real Estate at cox.net. And here's a good number to contact Elaine with, 757-288-4685. And right opposite her, we have Kevin Onizuk. He's branch manager with J.G. Wentworth Home Lending. And here's a contact number for Kevin, KONIZUK at jgwentworth.com. And here we are, cell number 757-645-8996. And don't worry, we'll give you more info a little bit later down the line. Also, we have a special guest today, and that is Blair James from Middle Peninsula Insurance Agency. And welcome, Blair. And well, good morning, Elaine and Kevin. What are we going to talk about this morning?
Well, part of the process of owning a home or even commercial real estate or property management, all of the above, is insurance.
Of course.
Whether you have a landlord policy, a tenant policy, a homeowner's policy, or a commercial policy, it's all different.
Yeah.
And so that's why Kevin and I wanted the wonderful Miss Blair to join us, so she maybe can clear some of the questions up that Kevin and I get answered frequently. That being said, we may have to do a part 2 in a couple weeks because this is a big, big topic.
Well, yeah, I quite agree. And Kevin, any points on what we were asking?
Oh, absolutely, Philip. And of course, great to see you again.
Great to see you too.
Yeah, well, in our side of the transaction, as you mentioned, I am the mortgage guy, the mortgage expert. So we handle the financing side of the home purchase process. We're putting a lot of money into this transaction. We are lending, in many cases, hundreds of thousands of dollars, and we need to make sure that that money is protected. That money is protected first and foremost by our lien on the house, our mortgage. That is the security on the money that we lend. And homeowners insurance protects that house. In the event of fire, flood, anything, we need to ensure that our investment will be adequately protected. Homeowners insurance is the most important part of that. And in some cases, flood insurance can also be required, which I'm sure our guest today will mention as well. As we go through the process, we can certainly give a home buyer some opinions of who to talk to locally, myself, the real estate agent. They can shop around, talk to their existing insurance company where they have their car insurance. Ultimately is the buyer's choice who they use for their homeowner's insurance. Myself, the mortgage person, Elaine, the real estate agent, cannot direct them specifically to one person they have to use. It is their choice, and it is fine with us as long as it's a legitimate insurance company. Your Middle Peninsula Insurance, all of your big names, as long as it's not like Bob's Pest Control and Insurance that he runs out of the back of his pickup truck.
I used that one the other day.
Did you?
Yeah.
Hopefully it wasn't with one of my buyers. It needs to be a legitimate insurance company, and there's certain general guidelines. But really what we ask buyers to do is get your best deal from where you feel most comfortable. Let us know who you're going to use. And one of the people I always recommend is Blair James, our guest today. That's why I asked her here, just to kind of answer some questions as you go through the home purchase process. What do I need to look for insurance? How do I shop around? What's important? And it's good information even if you're already a homeowner and considering your insurance coverage options. Maybe I should make a change. What's best for me?
Okay, well, Blair, welcome. And
thank you.
Can you tell us what you look for when Kevin or Elaine or the buyer calls you to get insurance on their purchase?
Sure. So a lot of factors go into buying home insurance. When they call me, one thing that the buyer needs to pay attention to when they're buying a house is ages of the updates in the homes. The roof, most importantly. They need to find out, they can usually find that out from the home inspection, but they need to find out the age of the roof, the age of heating, air conditioning. All of those can give you big discounts, and every insurance carrier is going to ask you that. Your credit score can make a big difference in your insurance premium. If you have, a lower credit score and you're rebuilding it, then you need to make sure your agent is shopping you around with a carrier who maybe cares a little bit less about your credit score than another. Even things like your dog and the breed of your dog can make a big difference with your insurability. So if you have 3 pit bulls and a couple mastiffs, then you need to make sure you're calling an independent agent who can actually find you a carrier to write that.
Okay.
Yeah, Blair, I have a question for you. I see a lot of insurance policies come across my desk, and when people are comparison shopping, I'll see different policies at different prices, but they have very different deductibles. And can you tell us a little bit about what is a deductible and how does someone pick that?
Sure. So the deductible, just like when you have your copay for health insurance, it's your portion that you pay before the home insurance company will actually pay out. A lot of people do not realize around here that with a lot of the big name carriers, even here in Williamsburg, you could have a deductible that's like 2% of your dwelling coverage. So 2% of a $300,000 home is a pretty big price that you have to pay before your insurance company will actually pay out. So if you have a hurricane deductible that big, you need to make sure that you know about it and make sure you can afford it if it happens.
Yeah, and that's probably the biggest risk here is hurricane.
Right.
So yeah, I've seen some where you may have a $500 deductible on your policy, but then a huge deductible for hurricanes, and that's the most likely thing that's going to happen. That's the most likely peril in our area.
Absolutely. So you need to go home, if you're listening to this, check your policy and make sure that you know exactly what you have. So if something does happen, you're prepared for it.
Is a northeasterner considered the same class as a hurricane?
It depends on the company. Some insurance companies will lump together wind, hail, and hurricane all as one storm deductible. And obviously wind and hail can cause a lot of losses. And some companies, it's just a named storm. So like Hurricane Michael that came through in October.
So Blair, if someone has a question about their deductibles, what number can they reach you at?
So they can reach me at 757-903-4037.
Okay, Blair, what I have the most problems with, as we have discussed before the show, is flood insurance and waterfront properties. Now, I have a house, one of my houses I own is in the colonies. It's on a 100-foot bluff. And I was told one time that I needed flood insurance because it was in the 100-year floodplain. Well, the only way that that's going to happen in New Kent is if a tsunami comes and goes all the way up the Chickahominy River and floods half of Virginia. I mean, I'm on a 100-foot cliff, so I opted not to get the flood insurance. But there is a lot of low-lying areas, especially around James City, York County, the river country, where people do buy second homes. So we need to talk a little about flood insurance.
So people are usually actually surprised to hear that there's a lot of areas in Williamsburg, like you mentioned, that are actually required to get flood insurance for. Places in Jamestown 1607, some homes in Governor's Land, and of course homes in
Chickahominy
Haven, yep. Of course, homes in Hampton Roads, Newport News. That's not surprising. But when it comes to flood insurance, the most important thing that a buyer needs, and you typically doesn't have when they call me, is the elevation certificate. Before they go out and spend several $100s on getting one themselves, we can use the one that the seller has. So if they look through their files and they have it from years ago, even if it's expired, they can use that elevation certificate and send that to me, and that helps me work up the flood insurance quote.
Now, will this affect... I do property management as well. So say that my landlord owns a home that we're renting. Well, how will this, when he changes it from a homeowner's policy to a landlord's policy, will this up his rates if he has to keep the flood insurance on it?
No, that shouldn't affect the flood insurance premium. That's totally separate.
Okay. That's good to know.
Oh, thank you. Kevin, does flood insurance affect the mortgage or the mortgage rates?
That's actually a really great question, Philip. It doesn't impact the mortgage rates, not your interest rate per se, but it does impact your monthly payment significantly, which then can have a snowball effect on other aspects. So let's say we are doing a home purchase with estimated payment of $1,000 a month, with repaying your principal and interest, which is your basics to pay back your mortgage, your real estate taxes, and homeowners insurance. But then you're in a high-risk flood zone and you have a flood cost of, say, $200 a month. I'm just making that number up. So that makes your monthly payment $1,200 a month, which can impact affordability. So number one, the buyer has to be okay with making that higher monthly housing payment. And number two, the mortgage company has to be okay with the affordability. So we probably qualified them with $1,000 a month payment. If they're paying $1,200 a month, that could impact their qualifications. Now, hopefully they will still be okay. Hopefully everything will go fine, but there have been instances where we've seen really expensive flood insurance that would take a mortgage from a comfortable approval to a very difficult approval or even a denial. So it's important when you're out house shopping, and Elaine will tell you this for sure, that you find out if you're looking to purchase a home, is it in a flood zone? Would flood insurance be required? And the sellers should be providing that information, but they don't always. It's not uncommon for the need of flood insurance to be a surprise and the seller side didn't disclose it, and then it can become a problem as we move forward.
Well, thanks. Blair, when is it a good time to file a homeowner's claim? Or do a lot of small claims impact the homeowner, or more than 3 large claims? And is there a national database that tracks property claims?
So first of all, before you actually file a claim, when something happens, you should always try and call your local agent first before you call the claims department. You should ask them if it's a good idea, tell them about the claim, and they can let you know if they think it's a claim worth filing. I personally recently had a tree fall on my house, and it fell against my house. I had a $500 deductible. It was actually during a hurricane, and I was fortunate to have a low deductible. The claim ended up being over $5,000. So that was obviously a claim worth filing, because the chance of my premium, so a home insurance claim will affect your premium for 5 years. No matter what company you're with, that's just going to happen. So you have to make sure that it's a big enough claim for it to actually be worth filing, and mine was. I have pulled so many claims reports and seen tiny little claims. For example, if you have a claim and the power goes out, do not go and file a claim for refrigerated property that's $250. Get yourself to the grocery store, refill your fridge yourself out of your own pocket, because that $250 claim is going to affect your premium way more than $250 over 5 years.
Is there a national database that tracks property claims?
So there is. I mean, it goes off your social, actually. So if you are filing 4 or 5 claims in a 5-year history, that's definitely going to affect your insurability. Yeah. There's something for everyone, but it's going to hurt your premium. So you just have to make sure that it's worth it. And yes, we will know what claims you filed, no matter what company is doing a quote for you. It goes off your name and your social. So
yeah, I would have thought so. Okay, good. Kevin, have you ever been told when you're doing a mortgage that the person cannot get homeowners insurance? And if so, what's the reason?
Actually, Philip, no, I've never been told someone can't get homeowners insurance. But as Blair just mentioned and really hit the nail on the head, cost can be a huge factor. Yeah. So there is, just as Blair said, something out there for everyone. It's just, what is that going to be? So when I talk to someone, I suggest they talk to 1 or more agents, comparison shop maybe a little bit, just to make sure that you're getting the best deal. Not one individual insurance carrier is always the best. not always the best combination of lowest deductible, lowest annual premium, best coverage. Dogs, I often see, are a factor when folks have trouble with insurance. It's because, hey, I have a such and such dog, and the insurance carriers aren't real happy about that. Now, if they just weren't sure what kind of dog they had and said it was a mix, who knows what that would be, but I'm not an insurance person. I'm just a mortgage guy. But the beauty of somebody like Blair is she actually has multiple carriers that she works with, so she can be a one-stop shop to shop around on your behalf.
Yeah,
So that's definitely helpful. So no, I haven't had anybody get flatly denied, but I have seen some folks come up with really expensive premiums outside the norm, and it's because of risk factors that the insurance company found. And just as Blair mentioned, credit, pets, past claims, I usually don't get it too much into the nitty gritty of that, but it can be very, very expensive.
Now, Kevin, you do not have to add your insurance into your payment or your taxes, correct?
It depends. I feel like on this radio show, my answer 75% of the time is it depends.
Do you work for that company? Or are you selling them?
It depends on the mortgage program.
Depends.
Your government-backed mortgage programs, such as FHA and VA, very commonly used by veterans and first-time homebuyers. Those require your taxes and insurance to be part of your mortgage payment, mostly because they're not making a big investment in the property. It's a little higher risk for us. We want to make sure that that insurance premium is being paid on time. Our property is being protected. We want to make sure the real estate taxes are being paid on time and we're not getting tax liens and tax foreclosures. On a conventional mortgage that's backed by Fannie Mae and Freddie Mac, been around forever and ever, your escrows are required unless you're putting at least 20% down or more. So if you're putting a 20% down or more, we've got some equity, we've got some safety. Escrows are optional, but almost everybody still does it. I maybe do one mortgage a year where people don't escrow for their taxes and insurance. Even when it's not required, most people just like the convenience of having it in their mortgage payment and not having to deal with it.
Okay. Now, Blair, Elaine deals a lot with investors and rentals. How many properties can an investor have insurance on at a time, and how does that affect the rate for the insurance?
So most insurance carriers put a limit of somewhere between 4 and 8 per person as far as the rental properties. I personally write both personal and commercial insurance. So I actually have a commercial insurance policy that I can put multiple rental properties on one policy. It makes it convenient and easy, and there's no limit. We have a policyholder with our agency who has over 100 rental properties on one commercial policy. So again, back to there's something for everyone. There is limits if you're doing personal insurance, but we can make it work with commercial insurance, even if it's a personal buyer.
Okay. Now, if a home is vacant when selling the home, rehabbing, or between rentals, how does this impact the owner?
So vacancy can be a big deal. It's important that you are upfront with your insurance carrier because a lot of the big names just won't even touch a vacant home. So if you are selling your home, sometimes they'll be lenient in the meantime when you buy a new one and you're selling it and it's on the market. But you have to be upfront because it's not worth not being upfront about it and then having a claim and them not paying out on the claim. So there's a lot of carriers that focus on vacant homes and they're happy to do it, and the premium will actually probably be better than one of the big names.
Is that the same for a second home that's vacant?
Second homes are fine because those are known to be seasonal and we're going to charge the premium for that. Vacancy is different. It's just a vacant home just sitting there that's never occupied.
What about a 203 rehab?
A rehab, I mean, that would just be considered a vacancy. And typically it's not like a separate policy for a home that's being rehabbed or flipped. It's just considered a vacant home. And we insure it as if it's completed. So all the remodeling and all that, we make sure we insure it as if the product's completed.
Thank you. Ladies and gentlemen, you're listening to Ask the Expert. And with us this morning, we have Elaine VonCannon. She is Associate Broker, ARB, SRES Notary, Residential and Commercial Property Manager with Coldwell Banker. And you can contact her at VonCannon Real Estate at cox.net. And here's a cell number, which was always a good one for you, 757-288-4685. And also in the studio, we have Kevin Onizuk. He's the branch manager with J.G. Wentworth Home Lending. And you can find him on 113 Bulliphants Boulevard in Williamsburg. Here's a good number for him, 757-645-8996, and KONIZUK at jgwentworth.com. And also we have in the studio
Blair James. Blair, give us your number.
Give me the number.
757-903-4037.
Thank you so much. Okay, back to the show. Now, Kevin and Elaine, tell us about what the market was like in January.
Well, I have noticed that the past 2 weeks, I have a lot of listings, that it has picked up on the showings of the listings.
Good.
And listings now are starting to come back on the market, where there wasn't a whole lot of inventory for the months of between Thanksgiving and toward the end of January. The inventory got very slim.
Wouldn't that be normal, though, at that time of year?
No, it used to be that way, Philip. It used to be that that would be the time of year that everything slows down. I've had some of my best years. The months have been December.
Really?
So yes, and the schizophrenic market we're in right now, I don't know how long this trend of picking up a little bit is going to last. Hopefully it's going to last through till the summer, but you really never know. Kevin, are you seeing the same thing?
I am seeing the same thing. Yeah, as you mentioned, this is generally a slower time of the year. Once you get into the holidays and then through January, February, it's cold. People are hibernating. It's just not typically the busiest season, although sometimes we do have good January, Februarys. But I'm super excited because according to the groundhog, we're going to have an early spring this year. And spring is when the buying season fires up. So usually around mid-March, things really start to get exciting in the real estate market. People are buying, people are selling, and given the groundhog's predictions, maybe we'll have that towards the end of February this year. So if somebody is interested, certainly give Elaine a call, give myself a call, give Blair a call if you have insurance questions, and we can help you get started in the process. Talk about some of the opportunities that are out there. If anybody is a first-time home buyer or knows a first-time home buyer, there's a lot of grant funds out there where you can purchase with little or no money down. You can get a grant that covers most or all of your down payment. That's super exciting. Or if you're a veteran or buying in a rural area, there's grant funds that can help with closing costs, buy down to a crazy low interest rate, which helps give you a lower, more affordable monthly payment. So there's a lot of really good affordable options, and now's a great time to get into the market before things get too crazy, because you can go out there and find the great houses before everybody else is out there trying to find them and bid on them. So it's really the best opportunity over the next few weeks to get out there, get pre-approved, and start shopping.
And I have one more question for Miss Blair. Do y'all offer at Mid-Peninsula, if somebody was to, I'll use the word loosely, bundle, I've been watching the pickers, if you bundle your car and your homes together and stuff, do you have like a discount you can give to folks for this?
So as long as I'm writing it through the same carrier, if I'm writing everything with, Travelers or Progressive or Hanover, whoever it is, then yes, there's a huge multi-policy discount. People always do themselves a disservice by saying, no, I'll just keep the auto where it is. I've had it there for 20 years. Just at least get a quote, see what it looks like, because it could save you hundreds and hundreds of dollars on your home insurance.
And do you help them with that? Like,
Yes.
will you say, okay, here's what is bundled, here's what it is with what you have now?
Yes, I can quote everything: the auto, home, your boat, umbrella, everything.
I have one question for Blair. What type of how is a condo insurance policy different from a policy for a single family dwelling?
So typically a condo, you have a master policy that's under the homeowners association that you're paying for and your dues. And that covers the roof and the siding on the home. So all you need for a condo policy, which is why it's usually less expensive, is you're just covering the studs in. So the interior walls, everything that's nailed down, and of course all your personal property.
Okay. Kevin, would you like to add anything?
I would like to add another question. Is that okay, Philip?
We have 1 minute. Yes.
1 minute. Okay. Well, then I guess I better be quick. If I'm thinking about buying homeowners insurance on my home and I say, hey, call Blair, when I advise my customers, what just one or two things do they need to have in mind and have ready when they call you? What's first out of your mouth? What's the first part of the conversation that's really important?
So, I mean, the first thing that I'm going to ask, which I mentioned earlier, which people don't typically know offhand, is ask your realtor or ask the seller's realtor when the roof was last updated. If it's a home that's 20 years old or older, especially if it's 50, 60 years old, you need to find out when the roof was last updated. It's so important. Besides the fact that it can get you a huge discount, we just need to know.
And it's near a fire hydrant.
Correct. Yes. If you have a fire hydrant that's over 1,000 feet away, that's going to hurt your insurance premium. So you need to know that too. But we can find that information.
Well, thank you so much. And I want to thank Elaine, Kevin, and Blair for another Ask the Expert. And I hope this has been a help to our listeners. Be sure to keep your radio tuned to FM 93.5 The Berg and WMBG AM 740 to find out when the next thrilling installment of Ask the Expert will be broadcast. So till next time, this is Philip Newbury. Have yourself a wonderful day. Now back to the regular programming. And as always, cheers.